Hi, Larry Berman here, and here's what's on my radar this week. Well, the obvious thing is the Biden capital gains tax cuts that kind of hit the tape yesterday unexpectedly. And when you do the math, the amount of assets in taxable accounts relative to retirement or registered or pension fund accounts that don't have to worry about those kind of capital gains and such is relatively small. And then the amount of long-term gains versus small-term gains. When you do the whole math, obviously by midday Friday, everyone realized that, oh, that's not such a big thing. Risk on, here we go. So, we do think earnings, big tech earnings next week is a big focus. Generally should be very, very good. But you saw some misses and slips by Intel and Netflix this week. And, when I go around and I look at the stay-at-home stocks, Netflix, comes to mind, obviously. And you say, well, what are these things worth? I look at a Zillow, right? So Zillow is this job posting. I don't even know, what is Zillow? Maybe is that the housing one? Maybe that's the housing. Anyways, it doesn't matter. Whatever it is, these stocks look like they're about to fall off a cliff with these massive head and shoulder patterns. And we're seeing them all over the place. So a lot of them that went from, a couple bucks to 100 and 200, they're all rolling over now. So that to me, when we're looking at what to be nervous about for the next number of months, it stands out dramatically. It's not the names that are working back to recover to old highs and that weren't working before and now should start working as things open up again. But, as I said for a long time now, the biggest risk to the market is the central banks not being liquid enough. And what we saw out of the Bank of Canada this week, first there was a fake headline that came out and said the Bank of Canada will not taper. And all of a sudden the Canadian dollar starts selling off because that's a bit more dovish. And then the announcement at 10 a.m. comes in on Wednesday and they taper. And they talk about stronger economies and better jobs and more tapering coming and so forth. The reality is in the supply and demand, because the budget came out this week, that there's going to be net new issuance somewhere around $65 billion. They're a bit more than 3% of GDP this year, compared to last year when the Bank of Canada bought 98% of all the new debt. So you're going to have net new issuance. So we're going to have stress on bond markets at some point. That pulls money out of equities. That whole thing is coming for the US market as well. And the question will be in early May when the Treasury does their new update on the refunding is how much of that gets pushed down the road, that new funding, because there's trillions in terms of what needs funding, in terms of the perennial deficits that we're going to experience and the stimulus that's already been passed that needs to be funded still. So, that's going to cause a big anxiety for markets. The only question is when. And in our pro eyes indicators, again, warning bells all over the place. When we look at classic chart patterns, we're seeing distributions in a lot of the names that have been built up on air, essentially. So the other headline that we saw this week, which is great, Janet Yellen wants to put an 80% transaction tax on Bitcoin. 2 thumbs up. Go for it. I'm not in favor of taxes, but that's what I think that desperately needs to come in because that is market anything real. It's all speculation and fluff. So bring it on. Go to 95% transaction tax as far as I'm concerned there and see what happens to it. So in any case, bear pick of the week is just be very, very, very cautious on these chart patterns and the names that and buy dips on the energy and the reflation and about the recovery and those names you want to buy the dips and you want to sell the pops on all the other ones that have been inflated. Have a great week, everybody. Next week, first vaccine shot. Very excited. Have a great week, everyone.